What would you do if I told you there are over 2 million Canadians that have no idea that they're figuratively sitting on a checkbook they have no idea about? It's underneath their couch, and they have a bunch of post-dated blank checks written to them by their home, which they can get every single month. That, my friends, is what we call reverse mortgage. And today in this video, we'll dive into exactly what that looks like for you. A lot of people think that reverse mortgages are a scam or a last resort, and I understand where that can come from. They haven't had the best reputation in the past, but there's a lot of ways to demystify that and talk about when it's actually appropriate or really it's your only choice. Fact of the matter is, right now, we have a third of Canada that's over 55 years old, and that is a threshold of being eligible for a reverse mortgage. Now, out of the one-third, two-thirds of those people are in debt. There's a lot of Canadians that are in debt, and their property prices have skyrocketed in the last 10 to 20 plus years. So people are literally sitting on cash, and they're in debt, and people want to enjoy life. And a lot more people, even boomers, are not putting up with the BS at work with, terrible managers, long commute times, all the things that make you unhappy. Life is short. You want to be healthy. So you're no longer working. You're getting basic pension, CPP, OAS, but that may not be enough. So how do you supplement your income when you're sitting on sometimes over $1 million of equity? Reverse mortgage, where instead of course, you paying a monthly amount towards your mortgage, you're actually getting a check every month. So that's where it's a reverse mortgage. So with that, let's dive into the basics of exactly how it works. So what is a reverse mortgage? Well, like any mortgage, it's a loan secured against your home. Now again, it's for people that are 55 years or more. You can access 55% of your equity. That is kind of the cap. And it's meant to be what is generally called a payment optional mortgage, where you get a certain lump sum and or you budget accordingly, and you're actually getting a monthly or bi-weekly amount mortgage coming to you. So basically as if you are working somewhere, and that's to supplement your income. So that's a reverse mortgage. Unlike you getting a big loan and having to pay it off over time, this is slowly dipping to your home equity, which is really sitting there and doing not much. Now, first and foremost, generally the rates for reverse mortgages are like B lenders or private. They're more than if you went to a bank for a general mortgage of, let's say, prime minus 0.75 if it was variable, or wherever the bond yields are at, right? At this point in time, someone has a rate at like 3.5%. So these are generally a little bit more, but you really cannot get on a typical mortgage if you don't make enough income or have a lot of other debt. You can't. They will not lend to you. So here you could be making very little income, have some debt, but be sitting on a ton of equity, and that's what the lender most cares about. That's a very important distinction. Understanding, well, when do you do reverse mortgage? When do you not have a choice but to do one? And generally, how does this work? So an example, again, is you have $1 million property. This means you can tap into about 55% of it. So with that, you can take out $550,000 up to that on the $1 million property, assuming you were mortgage free to start off with. Now, who actually needs a reverse mortgage and what's it for? We talked about supplemental income. So it's a way to pay yourself every month so you can live and not be stressed out and not be, tight on cash. That's the main reason. But of course, other reasons are you may need to bulk something to go on vacation, go do leisure activities. Like you're in your senior years, you work super hard, you maintain your home. You should responsibly take on potentially a little bit of debt for you to enjoy life. And, it's a very personal decision on how much you want to pass on to your kids, because you're giving away more equity, and everyone's different how they do that. Look, you may want to be responsible and say, I've got more expensive debt. I've got 20% credit card debt. This debt's going to be, a quarter to, maybe maximum half of the debt that I'm more in debt to. So you can consolidate your debt. You take out more expensive debt with cheaper debt, and you get paid less. You pay less interest over time. I think it's really important. Also, a lot of people cannot afford homes now. So your kids maybe can't qualify. They need a down payment. They call it the bank of mom and dad. Well, to access your equity, again, assuming you're not working and can't access a whole lot through your CPP payments and the other small incremental payments when you're retired, another way for you to contribute down payment so they can, again, to the market. Many different personal reasons, just a reminder on when to use a reverse mortgage, what it can be used for. And that's how people generally think about why they would do a reverse mortgage. For those that are savvy with finances and don't like paying taxes, which I hope is most of you, although taxes, of course, serve their purpose, you can access your equity tax-free. So other options are you can, up your ONS, you can increase your RRIF. That's what your RSP turns into when you're actually taking the money out. Those things are all taxable. So do the math, of course, with your accountant or your mortgage broker, but you may want to actually not touch those monthly recurring retirement income funds that come to you and use equity to save on taxes. And there could be a blend of that. So those are some things to just not overlook and keep in mind as you're looking like what's the most cash effective way to run your life. And lastly, I think it's important to think about what's the catch. Where does it all go? What are the what ifs with a reverse mortgage? Okay, so first and foremost, when do you pay back your reverse mortgage? Pretty basic. It's when you are no longer present in your home. That could mean you sold your home and or you pass away, your estate sells your home, and basically whatever interest you racked up, you sell the home, mortgage gets paid first, and the remaining equity, after realtor fees, etc., go to next in line, go to your kin. That's basically it. So as long as you haven't sold the house, you're still alive, you can keep tapping into your reverse mortgage up until, of course, the equity limit of 55%, right? So you've got lots of room with that. So overall, hope you learned a bit more about the reverse mortgage. I hope to just demystify the very high level versions of it, uses for it. And again, there's no shame in taking one. I would always recommend to look at other options and see if you are eligible for a cheaper mortgage. Can you qualify with the income you make? All those things are important because reverse mortgages are more than the average mortgage you get at the bank. So just little things to keep in mind. And yeah, that's it. If you have any more questions, we'll have to connect you with any of our premium lenders for reverse mortgages. There's more and more. Again, a third of Canada is over 55 and literally sitting on tons of equity that I don't think many of them realize they can tap into because they're not working. The bank's going to say no, but there are other options to use your equity. Use it wisely with that. Thanks so much for your attention and all the best.